All right, welcome back, everybody. Welcome back to the chat room. It's Ed Ponsi here, your FX educator, once again. Just taking a quick peek in the aftermath of a little bit of data that came out this morning. Right, we had some durable goods, etc., and we saw real little bit of volatility. But if you look at it within the big picture, we've still been in a 20 pip range. It's just really quiet out there. So what do we look for in situations like this? I think when volatility is low, people look for the breakout. And you might be able to get away with certain things in this environment that you may not be able to get rid of otherwise. I mean, like, for example, let's just say that you've noticed that this is in a fairly tight range. I'm going to go to a 60-minute chart. And we know that we're in a fairly tight range and that it's a news-driven market. What some people will do as Jackson Hole gets closer, it's probably not a good idea to do this right now, but as Jackson Hole gets closer, they might simply start placing buy orders above the current price and sell orders below the current price and just hope for a quick move, or a quick shot of volatility. Now, you can't do this type of trading anymore when it comes to things like non-farm payroll that have a very specific time, right? Non-farm payroll, for example, where I live, non-farm payroll always comes out at 8:30 on the first Friday of the month. Unless there's a holiday like 4th of July or something, Independence Day in the U.S., then it gets pushed back a week. But almost always, it's the first Friday of the month, 8:30 a.m. New York time. Because everyone knows the timing of the event, your broker can set up rules so that they don't allow you to place breakout orders too close to the current price. And, of course, this is frustrating for traders. But the brokers don't want to get put in a position where all of the clients go long. Now if the broker is a dealing desk, then they're on the other side of the trade. That means if you're going long, if all the clients go long at the same time, then the broker is short. And now the broker has market risk. Generally, they don't want this. So there's two types of brokers out there that you need to know about. Market makers, which is also called dealing desk, and straight-through processing, which is also known as non-dealing desk. If you're using a dealing desk, how can you tell? I'll tell you the easiest way to tell. Look at the spread. If your broker is taking the spread and widening it, you have a dealing desk. You know how it's easy to tell? Because if it's a non-dealing desk, there's no way to widen the spread. That's pretty simple. And yet, how many people have ever told you that? Right? If you look at that spread and you know that spread is wider on one broker than it is on another, then you know the wider spread, it must be a dealing desk. They are taking the spread and widening it. If a broker is not charging a commission, then they are almost certainly widening the spread. How else are they going to make money? And if they are widening the spread, therefore they are a dealing desk. See, this is pretty simple. There's really two different business models. Dealing desk charges no commission and widens the spread, but they wouldn't be able to widen the spread unless they were a dealing desk, unless they were actually physically involved with the price that they're showing you. Non-dealing desk has no involvement with the spread. They do not widen the spread because they cannot widen the spread. They do not have the ability to do that. They can only make money by charging you a commission. And most likely, that's the only money they're making on the trade, is the commission. In addition to that, they can also make money how? Well, selling you products and services, yes. But also on the rollover, when it comes to margin rollover, right? In other words, interest. You know how you can be charged or collect interest? Did you ever notice how the minus column is always higher than the plus column? Well, in a real market, they should be equal, right? Going long this currency, if going long this currency pair means I have to pay $1 in interest, then going short the same currency pair should mean that I should receive $1 in interest. But it never works out evenly. That's because the broker is making money on that situation as well. But if a broker is widening the spread, it is a market maker, it is a dealing desk, and they are probably not charging a commission. If a broker is charging a commission and the spread is very tight, they are not a dealing desk. Why do you care? Well, one of the things that people are concerned about in this business is my broker trading against me? If you have a non-dealing desk, a straight-through processor, right, a broker that charges a commission, they're not trading against you. I'll give you a good example. FXCM's clients lost a tremendous amount of money in January of 2015. If FXCM was trading against those clients, how would that have turned out for them? It would have turned out very good. But they were not trading against their clients, apparently, because it was a pretty bad day. It would have been their best day ever, I think. Right? That was on when Euro Swiss had the breakdown. You can see it on the chart right there. When Euro Swiss broke down, a lot of FXCM clients lost money. If FXCM had been trading against those clients, they would have made money. But they didn't make money, did they? In fact, they took a beating. Right? Now, ask yourself also, which brokers did not take a beating? Which brokers did not have a problem on January 15th, 2015? All right? And you may just find, if you go to Google and check that broker's spreads, because many of the brokers have their live spreads right online. Say Google live Forex spreads and type in the broker's name, you'll probably see their spreads. Okay, so do we know the difference? Do we understand the difference now between dealing desk and non-dealing desk? Okay, that's a pretty big distinction. And I don't want to give you the impression that dealing desk is trading against you necessarily. They're not necessarily trading against you. Right? But there is a potential for a conflict of interest. Meanwhile, if all the broker makes is a commission, they're just like, it's just like someone who's charging you to drive on a highway and they're taking the toll. They don't really care if you go fast or you go slow. They don't care if you drive. They don't care where. They're just charging you to get on the highway. That's what a non-dealing desk does. Okay, let's check it out. Now let's get back to business here. Ed, what do you think about pound US dollar if we get in an oversold RSI around 131.65.60? And let's take a look at pound US dollar, which is in a wide range post-Brexit. You can see that wide range right here post-Brexit, right? And I've got that area colored in yellow. Now, Carlos is looking a little bit lower than the current price. He's looking a little bit down. And he's saying, look, Ed, this is trending higher within here. So he's looking at 131.60, right around here. So Carlos is saying, Ed, this is trending higher, but if it pulls back to where it's oversold on the hourly, I can go long into an uptrend. I like it. I like it. I do. And so we would go to the hourly, and we would look. Now, I wouldn't even try to predict the price. But Carlos likes that price because it is resistance here. Correct me if I'm wrong, Carlos, but I believe you like it because it's resistance and it's support. Look at this, resistance, 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 resistance. It breaks and then it becomes support. So that's a heck of a nice area to buy into anyway, based on the short term. But Carlos is saying, hey, Ed, if this comes down a little bit, maybe RSI becomes oversold, which becomes my opportunity to buy. You can see what happened. Look what happened last time. RSI became oversold. That's right here on the morning of August 19th. So last week, you can see there's a sharp drop off in British pound. British pound becomes oversold, and that becomes a brilliant place to go long, right? That's going long, wow, close to 130. And of course, it runs all the way to 132.50 eventually. So I like the plan. The only thing that we cannot really predict, though, is we don't know if RSI is going to be oversold when the price reaches this point. So I would put it to you this way. You don't need RSI oversold to buy at support. Right? This is a really good, Carlos has identified a really good support level. I think it's really good because it used to be resistance and support, and those are the ones we like the best. So independently of whether or not this becomes oversold, I think you can buy at support. And if that doesn't happen, maybe this never comes to support, or maybe it goes past support. Independently of that, I think you can buy if RSI dips below 30. So we would love it if both of those things happened at the same time, and I think that's what Carlos's point is. He wants to buy RSI oversold on the hourly in an uptrend, and at the same time buy at support within an uptrend. I think it's a great plan. All I want to add to that is, if either of those conditions are met, it's sufficient to go long. You don't need both of those conditions to be met. You could go long on the RSI signal or at the pullback to support. Either one would be perfectly acceptable. But I like the way Carlos is thinking here. He sees an uptrend. He's looking for ways to buy. And he's not just looking at one tactic. He's looking at several tactics. He's combining several tactics and trying to intersect them. And I really like that a lot. Okay, great. I think it's definitely an opportunity to buy. And can it go to 133.20? Let's take a peek. Right, well, there's a lot of resistance up here. This whole area from 133, call it 133.10 to 133.50. So yeah, 133.20 is inside here. It could certainly go to there. It could certainly get to there. Right? But I think that whole area near 133 is probably trouble. Let's just put it that way. That whole area near 133 is probably trouble. You know, the way I look at it is, if I think there's a lot of different potential problems up here near 133, I will let at least some of that trade go before 133. Use it as a, underneath 133, I would let something go. All right? And then maybe, if you want to try to ride more of it past that point, that's fine. Great questions from Carlos. Real strategy, real time. Where else are you going to get great stuff like this? This is where, the room where you, the participants, are making this a great room. So thank you for that, Carlos. Great setup. And I wonder if Yellen will not try to raise rates until after the election. This is a really good question. Is the Fed supposed to be political in nature? No, they're not supposed to be political in nature. Right? But that doesn't mean they aren't. I've heard Yellen babble many of the same things that you would expect to hear from a politician of a certain ilk. Let's just put it that way. So none of that would surprise me a bit if Yellen were to wait until after the election. Also, I just want to point out that it's only fair, really, to wait until after the election. It's not as if the U.S. economy is on fire and must be doused. Correct? I mean, is this economy really that great that we just have to run out and raise interest rates right now, that it can't wait a few months? I would say no. There's just no pressing need to raise interest rates. The election is less than 3 months away. That's like 2 Fed meetings, right? So I would say Yellen tries to create the impression that a rate hike is still on the table, but frankly, I don't think there's any way she's going to do it ahead of the election. I don't think it would be fair, quite frankly. And because it would slow the economy down. The economy already is slow enough. I don't see any need to do it. And I don't think Yellen would do anything to hurt Ms. Clinton's chances. By raising rates now, it could slow down the economy, and that would probably push votes away from Hillary Clinton. I don't think she would do that. What if it were the other way around? What if there were a Republican president in charge? I still don't think she would do it. I just don't think there's any need to do it. And why turn it into a politically charged situation when you can just wait a few months? If you really think it's that important, it can wait. It can wait. Okay, great questions, everyone. Great questions. Let's go to another chart here. We've looked at a lot of pound charts today, haven't we? We've looked at pound dollar. We've looked at pound yen. I'm sorry, we've looked at euro pound. We have not looked at pound yen, though. And pound yen may be one of my favorites to trade, although the volatility is just drained out of it lately, as everybody waits to see what happens, right? Down in Jackson Hole, which is a great skiing area, my understanding. Great place to go skiing. But you can see that the daily, this has been trending lower, but look how tiny the candles are. The candles are all teeny tiny since the beginning of August. And the volatility has drained out of this. Kuroda probably says or does something to weaken their currency over the next few days. If he doesn't, it'll get stronger. If he doesn't try to do something to make the yen weaker, it will get stronger, just because that's what markets are anticipating. Right? They're anticipating that he's going to try to do something. Is he going to actually do anything? No, but he'll talk. He'll make comments. If the comments are not dovish enough, then the yen probably rises on those comments. What does dovish mean? Well, when it comes to war, right, in the U.S., when we look to our politicians who want to go to war are called hawks, and politicians who do not want to go to war are called doves. That's where this nomenclature stems from. In the world of finance, a hawk is someone who wants to raise interest rates, and a dove is someone who wants to cut interest rates or create stimulus. Would probably be a better way to put it in 2016, since rates everywhere are so low. So, Ms. Yellen is probably going to come out a little bit hawkish, whereas you would expect that. And Kuroda is probably going to come out a little bit dovish. Draghi probably comes out on the dovish side as well. Carney from the Bank of England, mildly dovish, I would think, but I don't think Carney really wants to necessarily drive the pound any lower. And I do think that the lower British pound is helping the economy. There were some good statistics. We had a really good retail sales report recently, but even this morning, someone pointed out to me that there were some good figures that came out. And just let me pull it up. I think it was auto sales. UK July car manufacturing up 7.6%. Year-to-date growth 12.3%. So UK car manufacturing, I don't think that's on our calendar, by the way. Just taking a quick peek at the calendar here. I do not think this was on the calendar. You know, it's not here. But there were auto sales figures that came out of the UK, and they're pretty darn bullish. They made 7.6% more cars, 126,000 units. That's pretty darn good. And don't you think that UK cars will sell better now that the pound is weak? Will that create demand from Europe? I would think so. If I'm in Germany and I had my eye on, gosh, I don't even know what cars they make in the UK anymore. But if I had my eye on one, I would be thinking, now's the time, right? It's so exciting and I just can't hide it, right? Isn't that right? I'm so excited and I just can't hide it. Right? So it's very exciting. It's very exciting that we're getting, really good figures out of the UK. And it just goes to show you that all this, remember I said all this Brexit fear was a bunch of nonsense? And so isn't that kind of being proven now? It's kind of being proven, right? Citibank, Commerce Bank, both raised their GDP expectations, their growth expectations. You know, there's no question that this was an organized campaign of fear and slander that failed. And, it teaches you cannot trust the media. You cannot trust the media at all, right? And I don't know if you saw, CNN is basically just lies now straight up. I don't know if anyone saw that. Has anyone else noticed that? They had a woman on, like, I guess her brother or significant other, this was like a week ago, and her brother or significant other, I guess, pulled a gun on the police and was shot, committing a crime or something. And this woman is on there screaming, "Burn down the suburbs." And CNN edited it and called it a message of peace. It's like, okay, CNN, why are you lying straight up? I mean, it's not a question of you're lying straight up to me, but it's a question of why are you lying straight up to me? What's the end game here? It's no longer a question. And WikiLeaks, I don't know if you've been following WikiLeaks, but WikiLeaks shows like CNN actually submitting articles to the Democratic National Committee for their approval. In other words, CNN is supposed to be the press reporting on politicians, but they're taking the article to the politicians to ask for their approval before they print it. What's up with that? No one's talking about it. You're never going to hear about this on the news. Yes, CNN has been lying for years, but now this is crazy. Now it's gotten out of control. Like, they're straight up lying and everyone knows it. The New York Times is lying straight up and everyone knows it. And how is this not the biggest story in the world? Nobody wants to report it. Why? Because it shows you that the press is completely out of control. The press is completely out of control. All right, so anyway, right, we live in interesting times. Someone said, may you live in interesting times. I think we do. Yeah, there's no question that they lie. The New York Times, all of them, Fox, I don't trust any of them. I had to stop following CNBC on Twitter because all they do is give me politics, and I can't even watch it anymore because all they do is they just try to shove this political idea down your throat constantly. It's like, well, dude, if I wanted that, I would turn on MSNBC. I put on CNBC because I want to know about the market. Could we please talk about the market at least a little bit? So I don't believe anything. If there's one thing we've learned, And the BBC lied outrageously to people in the UK, I think. The BBC told outrageous lies, right? And going into Brexit. And I think this is it. This is the year where people turn off the news. This is the year where people just turn it off and stop listening and say, you know what? I can listen to a made-up story. I can make up the news on my own. I don't have to listen to a false version of the news. But what I can't quite get to the bottom of is why. You know, did you notice that Soros was hacked? George Soros, our friend George Soros, was hacked, right? And no one's talking about it. But he influenced elections in 90 different countries. But no one wants to talk about it. Think about that. MSNBC is a lapdog for liberals. Fox, you could say the same about Fox for conservatives, though. All I'm saying is this: I don't trust any of them at all anymore. I mean, I literally expect anything on CNN is a lie at this point. You know, New York Times, forget it. It's not fit for the bottom of a bird cage. Okay, how did we get off on this? I don't know. Okay, by the way, markets are open here. By the way, really interesting story is this stock, Mylan. Now you can see this is the company that the EpiPen, right? So if you have an allergic reaction, you're supposed to stab yourself with this EpiPen, and so like if you have a peanut allergy or something and you get exposed to peanuts, you're supposed to stab yourself with this EpiPen. Well, this EpiPen goes from $100. They raised the price from $100 to $600. It happens over a course of years. Now, whether or not it's justified doesn't matter. It's just dumb to do that. It's just bad business. They have basically a monopoly. Nobody else can make the EpiPen because it's patented, and the patent hasn't expired yet. So Mylan is basically squeezing profits on this, which like, listen, I just think it's bad business. And so today they cut the price dramatically. They had to, right? They had no choice. Because it's turning into such a negative publicity, they need to erase it as quickly as possible. But I will give credit to the politicians like Hillary Clinton for bringing this to light, even though you and I don't really know why that cost went up. It could have gone up because of Obamacare. It could have gone up because we subsidize health care in other countries. But for whatever reason, it's just bad publicity. They had to roll it back, so they did. And you can see what they were murdered that stock. Down 10% in 2 days, and I knew they were going to have to roll the price back. Otherwise, the stock was just going to keep falling. Frankly, I would have liked it if they would have waited a little bit and let the price break down to here. I was looking to buy in this area around 39 or 38. So if they would have just waited till next week, I think we could have gotten there. But they went and cut the price today. But yeah, I think, look, you got to have some kind of control and some sort of awareness of how that people are going to react to a situation like this, right? You got to have some kind of awareness. Lionel says, I watch RT News. I haven't watched it yet, but I'll give that a shot. Yes, Soros is influencing elections all over the world and has a tremendous amount to do with what's happening in Europe right now and with what's happening in the United States. He funds many, many, many groups, and I think anywhere where you see violence in the world, I think it's being funded by Soros in some way, shape, or form. And, but no one's talking about it. And my guess is that the press gets money from Soros in some way, shape, or form. They're getting money from Soros, and that's why they're so bent on lying. And that's my opinion. I could be wrong. But Soros, how did he get so rich? Shorting the British pound, right? So you never know, right? You never know. So who knows, right? If that trade had gone the other way, the world would be a different place. Isn't that interesting? That's an interesting thought, right? If shorting the British pound had not worked out for Soros in 1992, he may have never become so influential. Anyway, um, you know, I've got my eye on this market. I think the market's worried about Yellen here, and this could affect the dollar too. We're going to run a little extra overtime because, like, I did get up on a soapbox there for a few minutes, so there's still a few things I wanted to say about the markets here. S&P 500 starting to tilt just a little bit lower. This was like the least volatile stretch in recorded history, someone told me. I'm not sure if that's true, but it's not hard to believe that this is like the least volatile stretch in the market over that period of time in terms of percentage moves. It's extremely, extremely tight. We could be beginning to see some movement now. I think the market's a little bit scared of what Yellen might say or do. Yellen might say or do something to bring this market down. Maybe not even intentionally. I mean, I think Yellen has to be very aware of the meaning and the weight of her words, but who knows? It's a big unknown. Speech is tomorrow, 2 p.m. 2 p.m. GMT. Was that 2 GMT? Let me just take a peek here. I'm sorry, 14 GMT. So tomorrow morning, you're going to get a speech from Yellen about 24 hours from now. And I think everyone's really focused on this and what she's going to say and what sort of hints she's going to give about interest rates. Honestly, don't know. But the market's a little bit squirrely. It looks to me like some longs are sort of closing out positions here. You're seeing it on like leading stocks like Apple. Apple's done very well lately, but look at that starting to tilt down a little bit. And you're seeing it on other stocks too, on other leading stocks too. Amazon, right, starting to tilt a little bit red here. Google. See, Google has looked kind of shaky for a long time. Look at that starting to tilt, starting to turn. You see that. I see this as profit taking. Whether or not that holds, I guess we'll see. But at this point, any trades that you place, I think you got to be out of them 24 hours from now. Let me just leave that as final note for today. Any trades that you place, you got to be out ahead of Yellen's speech tomorrow, if not sooner. Because Kuroda is going to give speech, and Draghi is going to give a speech. So just be aware of all that, okay? All right. So everyone's ready? All right. I'm going to jump out now. I'll see you back here. I believe I'm back on Monday. I'll have to check my schedule. I'm not sure. But I know I'm back with you at some point next week, and we'll talk further then. So until then, I've enjoyed speaking with you. This is Ed Ponsi. Thank you so much for listening. I'll see you back here next week. Everybody take care.